listeners. A beautiful evening to everyone. I warmly welcome you to yet another interesting, engaging, and insightful episode of our program series, Agricultural Productivity and Inclusive Economic Growth on Armourgate Radio Communications. I remain your host, Titilola Ogunsona. I'm excited I'm thrilled today because we would be continuing our discussion on agricultural finance and credit, a catalyst for optimum productivity. We had a distinguished guest speaker join us last week when we commenced this particular theme in person of Mrs. Adeyanju Yetunde, who shared valuable insight on this topic. I'm so happy because she's back with us today to share more expository remarks. And I recall last week I said that the voice sounds gentle, but the voice, behind that voice is a lot of insight, a lot of experience, expertise on this theme, agricultural finance and credit. She's actually very passionate about this topic. And agricultural finance and credit is said to be the lifeblood of agricultural sector, enabling farmers and agro-allied businesses access the needed resources, that they require to grow and thrive. While finance helps to reduce vulnerability of farmers, that would help to reduce poverty and of course improve their well-being, agricultural finance and credit are also crucial for promoting agricultural development, reducing poverty in an economy, and of course achieving inclusive growth in an economy. So join me, listeners, as I welcome Mrs. Adeyanju Yetunde. Thank you so much for joining us today.
Thank you so much, Dr. Mrs. Adeyanju, for having me today. I'm glad to be here.
I'm already smiling here because I know it will be another roller coaster. Okay, I want to take much of our time. We'll just dive into it. For those just joining, okay, and those who missed last episode, we started with agricultural finance and credit, the catalyst for optimal productivity, and we had various questions around, this topic, okay. But we'll go to the next one now. Today, we're going to talk about the theme catalyst. We've laid foundation on what agricultural finance is, what agricultural credit is, role they play. But we'll go to the other side, which is the catalyst for optimal productivity, where the emphasis will be on today. Now, when we look at the term catalyst, it implies a direct causal link. However, we have empirical studies that have struggled to isolate the impact of credit from other interconnected factors, such as access to agronomic training, market linkages, or even government subsidies. In other words, some scholars have said, some studies have carried out the research, and they've said of the opinion and found that loan alone doesn't guarantee productivity if not used effectively. Okay, so it takes me to my question. Last episode we tried to look at 3 main questions. We had follow-up questions, but it takes me my 4th main question for you today. This is the first question for today, but the 4th question so far since we commenced this thing with you last week. So, Mr. Adeyanju, when we try to measure these catalytic effects, how can we best distinguish the impact of finance itself from the impact of the technical assistance or market access that may or may not come with it? How do we ensure that finance is truly a catalyst and not just a cash transfer? Well, this is all we can take. Before we go, remember to send your feedback, comments, suggestions to contact@armourgate.org. And if you want to learn more about us, you just check us out on our website, www.thearmourgate.org. And please remember to check us on our social media handles, LinkedIn, Instagram, Facebook is Armourgate. And for your consulting needs, for your communication needs, yes, we have you covered at Armourgate. And remember to join my colleagues next week, Monday to Thursday, same time, 5 p.m. WAT. Yes, till I find my way to your devices again next Friday, same time, 5 p.m. WAT. And I will leave us with this quote: that finance is the fertilizer that helps farmers grow from subsistence to surplus, from poverty to prosperity. Stay blessed and do enjoy your weekend. I remain Titilola Ogunsona saying bye.
The innovations that are particular to Africa, as mentioned earlier, include digital finance,
Okay.
value chain financing, and blended finance models. And these are highly suitable, given the continent's growing mobile phone penetration and increasing access to digital technologies. So these innovations in particular include: 1. Mobile-based platforms; 2. Digital credit scoring and pay-as-you-go solar irrigation. Let me briefly touch up on them. Mobile-based platforms enables farmers to access credit, insurance, and advisory services on mobile devices, which are widely used in Africa. Also, digital credit scoring, it uses alternative data sources such as mobile phone data to assess creditworthiness and increase access to finance for underserved farmers. Then also the pay-as-you-go solar irrigation, as I mentioned earlier, helps to increase access to affordable irrigation solutions, which can be particularly beneficial for smallholder farmers in Africa. So these innovations can help address specific challenges facing African farmers, such as limited access to finance, markets, and climate-resilient agricultural practices. However, it's crucial to consider the local context, the regulatory environment, and infrastructure when implementing these innovations in Africa.
Thank you so much, Mrs. Adeyanju. I've told you listeners that it is an area of expertise and experience. You've mentioned that, for those specific innovations particular to Africa, you've mentioned a couple of them, but you said something I like, that is the kind of innovation that will be deployed in a country, on the continent, African continent, will be dependent on the regulatory environment. Am I right? Infrastructure and the local content. So based on this, I want to find out from you. Let's even look at Africa as a continent. Which countries in Africa would you say have the best agricultural finance and credit models that really work for them?
Several African countries have made significant strides in agricultural finance and credit models, empowering smallholder farmers and boosting productivity. Some of these countries include Kenya. We have Nigeria, we have South Africa, and also Ghana. Kenya, known for its mobile money revolution. Kenya pioneered digital credit solutions with platforms like M-Pesa and Apollo Agriculture, providing instant microloans to farmers. Nigeria also deployed Thrive Agric and AgroMall, are leading the charge in agricultural financing, using data analytics and supply chain financing to support farmers. South Africa deployed the use of Antu-Grow, which is leveraging blockchain technology to provide on-chain credit scoring for farmers. The last one I'm going to mention here is The last one I'm going to talk about is Ghana. Diggers is one of the model that is expanding its credit bureau for seeds and is enabling smallholder farmers to build digital credit profiles. So all of these countries, I can say, have made significant strides in agricultural finance and credit models, empowering smallholder farmers and boosting productivity in the agricultural sector.
Wow, that's a lot. We have Kenya, South Africa, Nigeria, and Ghana. Well, I know that subsequent episode we will see what we can also look at the models, more intensely, expand on what lessons can other countries in Africa learn from them. Thank you so much, Ms. Adeyanju. I've told you, listeners, it's always an engaging session, expository and insightful section with her. But however, we need to draw the curtain. This is all we can take on today's episode. We would hand over to ask Mrs. Adeyanju if she has any closing words for us before we finally draw the curtain.
Thank you so much, Dr. Mr. Barry, for having me on this episode. My closing thought for this topic are agricultural finance and credit, a catalyst for optimum productivity, is that agricultural finance is not just about credit. It's about unlocking the potential of smallholder farmers to feed nations and transform economies. And this is from Dr. Agnes Kalibata, the president for the Alliance for a Green Revolution in Africa. Thank you so much for having me on this session.
Thank you so much for always, joining us anytime we call on you. Thank you so much. What a way to, wrap up this episode, this topic. Still on talking about agricultural finance and credit being a catalyst for optimal productivity if it is gotten right, done, carried out in an effective manner, in a strategic manner. And it's also said that to overcome traditional lending barriers, which obviously are there, especially in developing economies, new models are rapidly emerging. Okay, and some of these new models include digital finance, talk about fintech, also using alternative credit scoring. We also have the option of the value chain financing, where processors provide credit to their suppliers, and also blended finance models that use public funds to de-risk private investment. Now let's look forward. Looking forward, which specific innovations in agricultural finance do you believe hold the most scalable promise for formally unlocking optimum productivity? Yes, I'm going to repeat it. I want to take that again. Which specific innovations, I know there are so many if you want to speak to them, but which specific innovations in agricultural finance, from your experience, do you believe hold the most scalable promise for finally unlocking optimum productivity at a systemic level, particularly for those farmers that have been persistently excluded from the formal financial system? Before Mrs. Adeyanju gives a response, let us take a quick commercial break. I'll be right back.
Armourgate, founded in 2008 out of a desire to build transgenerational structures for organizations, institutions, and nations. We have worked with large businesses, international development organizations, and public sector ministries and agencies. Armourgate, our uniqueness is that we do not just work for you, we work with you. For example, we do not leave you to the task after sourcing talent that will help the new hire settle into robust leadership development programs. We are technical experts in advising and supporting institutions on strategy and leadership, artificial intelligence, strategic human resource management, public sector reform, finance, audit and tax, FAT, and strategic communications. We do all this and more out of a desire to transform nations through institutions and organizations. For further inquiries, email contact@thearmourgate.org or call +234 810 999 6666, +234 807 957 4151, and +161 0504 6026. www.thearmourgate.org. Armourgate, building to endure and transforming nations through institutions and organizations.
Thank you so much for staying tuned. Still staying tuned. Okay, we're back from the short commercial break. If you're just joining us, we are discussing agricultural finance and credit, a catalyst for optimum productivity. We commenced on the discussion around this last week with Mrs. Adeyanju Yetunde, and she has been having a lot of insight on the subject matter. I just asked her a question that there are new models rapidly emerging to overcome the traditional lending barriers. And the question I asked before we took that short commercial break, what are the specific innovations from our own experience and expertise in agricultural finance, all the most scalable, promise for finally unlocking optimal productivity at a systemic level, particularly for those farmers that have been persistently excluded from the formal financial system. Over to you.
Thank you so much, Dr. Mr. Barry Ogunsona. Well, for the innovations, there are several innovations in agricultural finance that show great promise for unlocking optimum productivity, especially for farmers that are previously excluded from formal financial system.
Okay.
Just as we earlier mentioned, let me just touch them briefly. Digital finance, which is fintech, this talks about alternative credit scoring, mobile banking, and digital payment systems that are increasing access to credit and financial service. Just as we all know that fintech is the real gamer right now. So this has also been spread to the agricultural sector. Value chain financing is also one of the innovations that have actually made an impact in agricultural sector. This helps these processors provide credit to suppliers, and it helps to reduce risk and also increase productivity. And also blended finance models. This helps public funds. This allows public funds to de-risk private investments that can attract more capital to agriculture. Another one is AI-driven credit scoring.
Okay.
Which is a machine learning model that can assess creditworthiness, enabling more accurate lending decisions.
Okay.
And in addition to that is mobile-based platforms. We all know with our phone we can do so much more. And this has also extended to the agricultural sector, enabling farmers to access credit, insurance, and advisory services on mobile devices. Just as we all know that even in the medical thing, with your phone you can get medical advice. Also relating that to agricultural sector, with your phone, having the right platform, having the right application, you can get advisory services, and this will help farmers a lot. Additionally, there are innovations like satellite imagery and AI analytics. This provides real-time insights on soil health and weather patterns. Helping farmers make smarter and wiser decisions. Another one is blockchain verified contract farming. This reduces default and improves trust between lenders and farmers. The last one I'm going to talk about is pay-as-you-go solar irrigation. The pay-as-you-go solar irrigation increases access to affordable irrigation solutions. You know, just as we discussed on the last episode of this topic, that irrigation system is the new vibe. People no longer have to wait for rainfall before they can have access to, before their crops can have access to water that will help their plants to grow. The irrigation system now helps farmers, and it helps to improve their crop quality and crop fruits and their crop output. So pay-as-you-go solar irrigation increases access to affordable irrigation solutions. As easy as the irrigation system may be, it is also sometimes expensive. But this innovation has helped smallholder farmers to have access to it, so that they can make affordable payments that will help their farm inputs, and as a result bringing out good and positive outputs. So the innovations mentioned, streamlining them to Africa, the innovations that are particular in Africa, such as digital, thank you so much, Dr. Mrs. Abari Ogunsona, for having me. From the question, to ensure the catalytic effect of finance, you must separate the impact of credit from that of training, input support, or market access. This can be done through rigorous evaluations, using methods like randomized control trials, which is RCTs, instrumental variables, and propensity score matching. Randomized controlled trials are used to assign farmers to treatment. Treatment talking about finance and technical assistance, and control groups to measure impact.
Okay.
Then the instrumental variables talks about using variables like distance to a bank, that is variables to measure distance to a bank or credit score to isolate the effect of finance. Then the third one, propensity score matching. This matches farmers with similar characteristics to compare outcomes. Another one that can also be mentioned is regression analysis, which we can say is used to control observable factors. For example, trading, market access. These are used to estimate credit effects. So we might be wondering, how or why does this work? These methods, especially the randomized controlled trials, minimizes selection bias and isolate the treatment effect.
Okay.
Then the instrumental variables help to identify the causal relationships between the causal relationship and the effect of finance. The finance the credit that is being given to the farmers.
Okay.
So the third one there says propensity score matching helps to reduce confounding variables.
Okay.
So some of the challenges that could come up during the course of using these methods, because not everything goes rosy, are data quality and availability.
Okay.
Because in this part of the country, in this part of the world, getting quality data and the availability of these data can be a constraint in ensuring that these methods work. Another one is complexity of agricultural systems. This means that there are some systems, especially in West Africa, that might not work in the agricultural sector. Another one is difficulty in capturing long-term impacts. That's like a forecast.
Okay.
And forecasting something has to do with predictions. It can either work out or not.
Okay.
So difficulty in capturing long-term impact is also a major challenge in ensuring that these methods work in ensuring the catalytic effect of finance, separating impact of credits from that of training, input support, or market access.
Thank you so much, Mr. Adeyanju, for what you have mentioned. I want to take you up on that. You mentioned some of the challenges. Okay, we're talking about that could hinder finance from being truly a catalyst for optimal productivity. So that is finance is not merely a cash transfer. You have mentioned, and what you mentioned, you also said, is that this is actually typical of developing economies. And the first you mentioned is data quality and availability. You mentioned complexity of agricultural system, and the third you also mentioned long-term impact in terms of forecast, adequate forecast. So I want to find out from you. I want to have a follow-up question for you on this. Since you mentioned these challenges, these bottlenecks, could you tell us what feasible solutions that government of the nation can deploy?
Thank you so much, Dr. Mrs. Ogunsona. For some of these challenges, governments can deploy especially for the first one, which is data quality and availability. Government can deploy can leverage on digital platforms, mobile technologies, and satellite imaging to gather accurate and timely data on farm level outcomes, weather patterns, and also market trends. Another solution to that is mixed method approaches. That is, government can deploy the combination of quantitative and qualitative methods to provide a more rigorous understanding of the complex relationship between finance, technical assistance, and market access. To tackle the challenge of the complexity of agricultural system, government can deploy the use of system thinking, which means analyzing the agricultural system as a whole, that is understanding the interconnectedness of factors like climate, soil, water, markets, and policies. This way, the complexity of agricultural system can be tackled. Another one is multidisciplinary teams. That means collaborating with experts. Every field has its own expertise. Collaborating with experts from agronomy, economics, sociology, and data science to develop more comprehensive solutions that will help in tackling this complexity. For the third one, which is the challenge of difficulty in capturing long-term impact. The solution to that can be assigned to longitudinal studies. That is, when government track farmers over time by collecting data at multiple points to assess sustained impact. Another one is data analytics. That is, analyzing existing data sources such as credit bureau records, or farm management software to identify trends and patterns. Using these solutions, I know and I believe will be a way of tackling some of these challenges that could hinder catalytic effects on that could hinder the methodology in achieving catalytic effects.
That's a lot impact inside of one. So it implies that from what you said, it's going to be multifaceted approach to ensuring that the catalytic effect of finance is felt in such a way that it will lead to optimum productivity. And if that's attained, then you can now be talking about achieving economic growth and, of course, inclusive economic growth.